Welcome back to another video. So yesterday I returned back from holiday. Now you're probably wondering where my suntan is, and the weather was crap, so the less we talk about that the better. Now I returned back at around 4 AM and at 10 o'clock I had a phone call from my mortgage broker, and basically he informed me that one of the mortgage deals on one of my properties was coming to an end and we had to find a new deal before the rate went up to the variable rate. So he went through some figures and he came back with a deal that actually not only reduced the interest rate and reduced the monthly payments, but also allowed me to draw down £11,000 in equity from the property, which is great. So not only am I going to be paying less interest on the mortgage every month, but I also get £11,000 in tax-free cash. So in this video, I'm going to go through the figures of this property and I'm going to show you how I managed to withdraw £11,000 tax-free. And I'm also going to just cover some of the, not only the benefits, but also some of the downsides that come with withdrawing money from a property, and just a few things that you need to be aware of should you release equity from any of your properties in the future. Because I think it's important that landlords and property investors are actually aware of some of the risks as well as the benefits. Now, the benefits are clear to see, as I've just mentioned. Not only am I going to be paying less per month, but I'm actually getting £11,000. So it's hard to see the downfalls of that, but stick with me because hopefully in this video I'll reveal a couple of things that may just help you in the future. So let's run through a few figures. Now, the current interest on the mortgage which I pay on this property is £111 per month. Now, over the last couple of years, interest rates have dropped, as we know, and the price of properties have also rocketed. So this has actually put me in a good financial position. So the new interest rate on this mortgage is going to be 1.73%, which means that my monthly payments of £111 are going to drop to £98 per month, which is great. And not only that, the value of the property has gone up to £100,000 from the existing value of about £85,000. So what this means is I can now take out a mortgage at the value of around £100,000. Now, for contingency's sake, so to speak, we're going to go in at £95,000 and we're going to have a mortgage at around 70 or 75% of this. Now, this allows me to borrow more money against a property, which then allows me to have £11,000 in tax-free cash taken out. Now, the reason it's tax-free is because it's not actually capital gains, it's not an income, it's just you increasing your borrowing on the property, which is why you don't have to pay tax on it. Now, of course, with this £11,000, we're not just going to fritter it away. I'm going to use it to invest in something else. Now, as a landlord and a property investor, if you want to build a medium-sized or a large property portfolio, this is the way to do it. You have to use the equity built up in your property and then reinvest it in other properties. And not only that, but if you can save all of the cash flow that you get from your rentals, add this to all the capital appreciation, then it's not going to take very long for you to build a reasonable sized portfolio. And this is exactly what I've been doing over the last 6, 7, 8 years. And it is for this reason that I personally think that property is the single best investment that you can make. So not only does it give you a great cash flow, but it also gives you great capital appreciation over the years. Now, the property that I'm talking about now is actually the first buy-to-let that I bought around 7 or 8 years ago. Now, if you're still in two minds about getting into property now, let me just show you these figures and then ask yourself again if you'd like to get into property or not. Because what I'm about to show you is pretty incredible in terms of profit that you can make on just a basic, cheap buy-to-let property. So, over the last 8 years, this property has consistently made me £300 profit per month. Now that is profit and not income. So, over a 12-month period, that's £3,600. Now, over the 8 years, this is £28,800 profit just from the rentals. Now, add this to the capital appreciation, which I've already mentioned, which is £11,000, which I'm going to be withdrawing. And also, around 6 years ago, after I'd bought the property and renovated it, I also drew down £12,000 in equity then. So, totting all this up, this property has actually given me profit of over £51,000 in the last 8 years. And not only that, after I've withdrawn this £11,000 equity, I'm still going to have over £20,000 equity still remaining in the property. Now, if that doesn't blow your mind or doesn't inspire you to get into property, then I don't know what will, because when I purchased this property, it was only £54,000, and I did actually do a video about this. I will put a link at the end so you can watch that one. I basically spent around £5,500 renovating, and plus the fees, solicitors' fees, stamp duty, which is about £3,000 or £4,000. I actually got all the money back out after 2 years and made a bit of profit. And now, 6 years later, not only have I made over £28,000 in rental income, I'm now taking out another £11,000 in profit, which I said earlier, this profit will now be used to invest in another property, which again will help to build my portfolio even quicker. Now, before you go thinking this is wonderful, it's amazing, why don't everybody do this, why can't we just keep withdrawing equity from properties, I do want to mention some of the downfalls and just express my air of caution, so to speak, because I've seen in the past landlords and property investors whose property empires have crumbled when there's been a financial crisis. So what happens is people build their portfolios quickly by continually releasing equity every time the property prices rise. So when something happens like a property crash or interest rates go up, they find themselves in a bit of a sticky situation where they're either in negative equity or their interest payments on the mortgage are higher or almost at the level of the rent, so they're losing out on all the cash flow. Now for me, I like to be cautious when investing, so I'm not going to be going with releasing equity from all my properties every 2 years or every time the market rises, because I know that one day there will be a crash or interest rates will go a lot higher than they are now, and I want to keep hold of my assets and I want to protect my assets as much as possible. So for me, I don't mind leaving equity in my properties. Now don't get me wrong, things are different nowadays than they were pre-2008, because back then you could have a mortgage for like 95%, even 100%. So when people kept withdrawing equity from their properties, they were maxing out their borrowing, like to the point where they didn't have any equity in the houses. So soon as the housing market dropped or interest rates go up, they're absolutely stuffed. So after the financial crisis, lenders got a bit more savvy, and that's why you now have to have a 25% deposit when buying a house, because you will always have 25% equity in the property, which means you've actually got a bit of leeway should the property markets drop. Now, in the example I've given you here, I've taken another £11,000 equity out of this property. Now, this is still leaving me with well over £20,000 still in the property. So, if markets were to drop, I still have my head above water. Now, if property prices continue to go up, let's say this house goes up another £10,000 within the next 2 years, will I withdraw more equity? And the answer is probably not, because as I say, I don't want to max out my borrowing on all my properties. And if I were to give advice to anybody who already has a portfolio or were thinking about buying property, then I would always say to try to keep that 25% plus in the house. Like, don't go maxing out your borrowing if you're planning on keeping your properties for the long term. So you want to protect yourself from any market crashes or interest rate hikes. So this brings me on to, when is the best time to actually take out the equity? Now for me, now is the best time, because interest rates are really, really low, and going off the current news and the economic state of the country, it seems like interest rates are going to be creeping up. And also, house prices have absolutely rocketed over the last 12 months. So a lot of landlords will find themselves with a good chunk of equity in their properties. So for me, now's a good time to do it. You always want to do it once your mortgage deal is coming to an end, because if you do it halfway through, then you're usually going to have to pay a penalty. So always check to see when your mortgage offer is coming to an end. Usually they're on 2 years fixed deals, or sometimes even 5. So if you do use a broker, just check with them to see when yours is actually coming up for renewal. And if you don't actually own any properties yet, then I hope this little quick example has shown you the potential and the profit that property can make you, even if your cash flow is pretty low, or even if you can only get in the market with a cheap, lower price property, you can still make really, really good money from capital appreciation. Now, I know that a lot of landlords, especially down south, base their whole strategy purely on capital appreciation, because the cost of the houses down south don't allow enough rental yield to actually make good cash flow. So they buy the properties, rent them out, probably break even, and then they hope to gain on the capital appreciation over the coming years. Whereas me, for example, I like to do both. And around my area, some of the buy-to-lets offer a really good cash flow and a really good capital appreciation. So combine these two together, then building a portfolio can be done pretty quickly. So I know I've been waffling on a bit now. I'm going to leave it there. I'm also, now that I'm actually back in the country and I'm going to be here for a few months before I go away again, hopefully this will give me more time where I can actually produce more content and upload more videos so that you can learn more about property and investing and building wealth. Now, if you've taken something from this video, please be sure to hit the thumbs up button, as that'll really help a small channel like mine to grow. And please don't forget to leave a comment if you have any questions, or if there's any other videos you'd like me to do. I'll be happy to answer them. And as I said, I'll do my best to put more content out there, and I'll catch you soon.